Good morning, good afternoon, good evening, and good night, depending on where in the world you are joining me from. I am Illuminati, and this is the Crypto and Cognac podcast show, as always, live every Thursday, 7 p.m. Atlantic Standard Time. Sharp, right here, YouTube. How are you guys? Shout out to everybody who's already logged in. Shout out to my brother Steven, always in the chat. He's here before I'm here. He keeps me, accountable. And if I'm here, if Steven is here, Hennessy, they're here, right? This evening I'm having myself some pure white. Yeah, I'm in a chill kind of mood, right? Had a nice little relaxing DDI lime this weekend. Had some pure white, and I decided, you know what, I'm gonna run with that for the week, right? So, what are we talking about this evening? We are chatting about the bottom, right? No, not like that. We're talking about the market cycle bottom, right? We have seen a lot of craziness happen in the last few weeks, right? We are in the midst of another global war, not quite a world war yet, right? But another global war. And despite the uncertainty that comes with that, the economic uncertainty that comes with that, Bitcoin continues to perform very strong in these uncertain times. We are hovering above 70K right now. So it begs the question, and a lot of people have been asking the question, has the cycle bottom already arrived and passed us? Right? Are we looking forward to the next all-time high, or do we still have deeper to go? And that is what we are going to be talking about today. But first, cheers. Actually, that was first. Second, housekeeping, right? I am not a financial advisor. Nothing that I share here, nothing that Steven shares in the comments should be misconstrued as financial advice. Always information, conversation, and a little bit of education, right? The ICE rule, the same way we have our yak is the same way we have our crypto conversations. And remember, drink, drive, and degen responsibly, right? So, back to the lecture at hand, right? We, in the last cycle or during the last bull market, we would have achieved an all-time high of 126,000, right? We would have had a conversation as to whether or not that was in fact going to be the cycle top. Some people said no, some people said yes. I myself thought we were going to go higher. We did not. We have since come all the way down by about 53%. I think in February 5th, 2026, we would have gone and touched 60K. I think at $60,074 on some exchanges, which is, like I said, roughly a 53% drawdown from that initial all-time high of 126,000. Since then, the market has declined. We have lost over $1 trillion in the total market capitalization of crypto. So again, that begs the question, is the bottom in? Or is this just the first stage of a deeper bear market, a deeper bear cycle? And what should we be looking at, right? Now, obviously, they said history does not always repeat itself, but it oftentimes rhymes. So if we look back at previous bear markets and the drawdowns from all-time highs, maybe that will tell us something, right? So 2013 peak, we saw a drawdown of 93% from all-time high. 2017 peak, we saw a drawdown of 86% from all-time high. And then in 2021 peak, we saw a drawdown of 75 to 77%, depending on which exchange and which numbers you're using. Now, what can we take from that? We have seen that with every cycle, there has been not a significant, but there has been a decrease in the volatility of the drawdown, right? We came from 93 to 86, 87, then to 75, 77. So is 53 a right guesstimate for this cycle's drawdown? Or based on the numbers, are we expecting to see a 65, 66% drawdown? And what might bring that on, right? So I think 53% is reasonable. Why? Because as we would have discussed in a couple previous episodes, the market has matured significantly. We are seeing significant more institutional investment in the market, and that has, in my mind, stabilized the market quite a bit more. We've seen ETFs, which means a lot more, I don't want to use the word mature again, but a lot more sophisticated investors. We've seen asset managers being involved in the play, and then we're seeing corporate treasury adoption as well. Now, these aren't like what we've seen traditionally in previous markets, retail consumers who capitulate when times get really hard. And as well, the market has grown significantly. So what it takes to the sell pressure that would have previously caused the market to capitulate, that sell pressure is not going to be able to have the same kind of impact in this cycle based on just the size of the market capitalization of crypto, right? A lot of analysts have said that there is significant levels of support around 54K, and because that had been a previous significant accumulation zone. But we know that the big players tend to front run those zones. So 60 could be that front running of that 54K significant accumulation zone. Like I said previously, a lot more awareness, I think, is around the market. So because people have become a lot more familiar with how the corrections happen, what to expect based on the cycle, what to expect based on the halving supply shock, I think people are less, even the retail participants are less likely to just sell at a loss and go away, as we would have seen in previous cycles. People understand that, what, I don't lose anything until I sell. So I think we have a lot more people who are, I think, a little bit more comfortable holding on through the pain and just waiting for the next cycle to bounce back. And I think that awareness is what also kept us from realizing the significant all-time high that we were expecting in the last bull market, around 175. People were talking 250, people were talking 500,000 type of numbers. But I think everybody is kind of expecting it, and because everybody's expecting it, everybody's trying to, you know, reverse the play, or do different from what is expected. And I think a lot of it is kind of already built in. So until we get to a point where the adoption, um, curve, I think it has just exploded. I think we're gonna see lower all-time highs in terms of percentage, in terms of, you know, rocket to the moon. And I think we're gonna see narrower capitulations. We're gonna see narrower drawdowns in terms of cycle bottoms as well. I think ultimately I am still expecting that something is going to happen. We knock wood, but we have not really seen a black swan event directly in the crypto market yet. And I think that's still possible. Like I told you all before, my eyes are very much fixed on November 2026. I don't know what is gonna um, precipitate it, but you know, like I said, history, it doesn't repeat itself, but it often rhymes. And so for me, November 2026, just like November 2022, I didn't expect that something would have happened with FTX, but it just seemed like it was going to happen, right? Every 4 years, so 2022, 2018, 2014, you know, have all been really good times to be buying. So for me, I'm looking at November 2026 for, you know, major accumulation. I'm not saying that we're going to go below this 60K, but I think that is where, for me, mentally, the reversal might come. I think crypto continues to kind of trade in a vacuum. We still see the recent pressures from the tech space. We continue to be somehow aligned with the tech stocks. We are seeing global liquidity tightening. We don't know what this war is going to do to that. And we're seeing risk off investors continue to kind of target gold or move towards gold. We will see if we see some movements from gold to digital gold, and whether or not that's going to precipitate a launch into a fresh bull market. But for me, I think the major reason why I am contemplating this being the bottom is that we have had so many stress tests, you know, in terms of events that usually would have triggered, you know, capitulation. And I think only if something significant happens in the traditional financial space and we see ETFs really, the outflows on ETFs really be significantly impacted, something happening with MicroStrategy, and them being forced to sell even a little bit, I think is going to create some fear and some panic. But outside of those type of black swan events, I think it's fair to say that we can expect lower highs on the top end and higher lows on the bottom end. We talked about this before. It seems that all these narratives are not moving the needle like they have previously. Like this week, we had some amazing news in terms of MasterCard's utilization of Solana. The price did not move a lick. You know what I mean? And in previous cycles, those are things that we would have seen 20, 30% swings. So I just think that the market is a little bit more sophisticated and people aren't being moved, or the volume of people and the volume of money isn't being moved in the ways that it was being moved in previous cycles. So, like I said, lower highs, higher lows, but that doesn't change the outlook. I mean, at the end of the day, you all know what I say, adoption is inevitable. So, for me, if you think the bottom is in, if you think the bottom is still to come, do your own research. Dollar cost averaging is still a very, very strong technique to make sure that you're capturing all the opportunities at the higher levels, at the lower levels, and balancing out the average cost of accumulation. Um, but yeah, I think 60 might be it. Honestly, I'm not hoping that 60 is it, because like I said, I still have plenty BTC that I need to accumulate long before it hit 1 million. So for me, lower price, I mean, 10 years from now, yeah, that's my horizon. So 10, 15 years. So if I got 35,000 BTC again, love that. You understand? But it may not be in the best interest of everyone. So so yeah, like I said, do what works for you. It doesn't matter what Illuminati says. It doesn't matter what your brother say, your mother say, your sister say, your father say, your brethren say, right? Do your own research. Make sure that you are assessing your time horizons, assessing your financial goals, assessing your risk appetite, assessing, what makes sense for you in this space. To invest more than you could afford to lose, because you can lose it all in this crazy cryptic space of cryptocurrency. So that's my time. Stevie, how are we looking? Yeah, Steven saying it all day. Never invest more than you're willing to lose, right? But yeah, I think 60K. We just need to, see some accumulation around this 70K thing, push up towards 74, 75, come back, retest 70. And then I would be able to say with some definity that the bottom is in. Until then, it's all speculation. Nobody have a crystal ball, right? Guys, next week is episode 200 of the podcast. Can you all believe it? We've been doing this for 200 weeks. That is insane to me. If it's not insane to you, that's insane to me, right? I might crack open the 200th anniversary VSOP. Steven, you tell me what to do, right? You guys hit me up in the comments. Tell me if you all want me to open the bottle or I should save it. Is there anything better to crack it open for than the 200th episode of the Crypto and Cognac podcast? Or maybe I open another bottle. Maybe a James, right? Maybe we crack some parodies to celebrate. You understand? Or maybe we keep it with the good old faithful VSOP. Yeah. But until then, guys, you all stay safe. Stack those sats as always. Illuminati out. Be blessed. Cheers.